What's up, everyone? What's up? Hope you had a great and amazing week. Today is Thursday, the 15th of January, 2026. It's my first ever stream of Sophia Fx. I hope that on your side, I hope everything is clear that side. And yeah, like, share, and subscribe. Like, share, and subscribe to the channel. So I'll just be analyzing a few pairs for you, and I'll also be. Let me just quickly share the the live with the Telegram. Yeah, so basically, I've been looking at a few pairs, trading pairs, and this week, since it's the beginning of the year, the market has been a bit slow. Since it's the beginning of the week, you need to understand that you need to stick to your plan always, because if you don't stick to your trading plan, that's where many mistakes are made. Okay, a lot of people make the mistake of wanting to trade every single day, and because of that, they end up becoming losers. Right? So when it comes to trading, it's more about probabilities. It's the probabilities that you have in the market and how you can use that as a leverage. All right, so let's say example, we have 5 trading weeks. All right, we've got 5 trading weeks, obviously, and out of those 5 trading weeks, if you are a day trader, obviously that means that you are only trading one pair, or maybe by chance 2 pairs. You cannot trade more than one pair if you want to be profitable, unless you are maybe a swing trader. If you are a swing trader, that's now a different scenario, and that's now a different story. Swing traders are people that are now expecting to hold the market for a very long time. When you're a swing trader, then you can have more options. Like you see right here on my chart, I've got my top 6 pairs, and I also have other pairs that are on the list here below. So these top 6 pairs are pairs that usually give me positions, setups on the market, average. So I know from here, when I'm swing trading, I know from here that I can find a lot of setups. All right, so now swing traders are not the same as day traders. Day traders are people that are looking for setups every single day. All right, so when you are a day trader, you are basically looking for setups, one setup per day, one quality setup per day, for you to be able to be profitable in the market. That's what day trading is basically about. Swing trading is when you're looking for maybe 2 to 3 setups per week, because you are opening and risking enough for you to make a lot of money. But day trading is like you have daily targets, and there is also scalping. Scalping is now when you are trading on the lower time frames and you are coming in and out in the market. That is a more risky way of trading. If you are not mentally strong, you can literally like blow all of your money, and many people end up blowing their accounts because of day trading and swing trading, actually, and scalping. And what I'm trying to avoid is to focus on teaching people on how to scalp, because when you are scalping, you end up losing money. All right, unless you are an expert. If you are an expert, then I can advise you to trade the market, every single day, or every time you think it's going to move. So probabilities work like this. All right, you see that we have 5 trading days and you want to be a day trader, right? Then at least out of those 5 trading days, you should at least be profitable 3 or 2 times, at least 3 or 2 times per week. That is now something that makes more sense for a trader. All right, it makes more sense like if you're profitable 3 times or 2 times a week. Why? You won't overtrade, you won't over risk, you won't revenge trade, and also over the time you will see the quality setups that you're taking, which are actually going to put you on the positive side of, you know, money wise. So now if you are profitable 3 times a week, even if you lose 2 times, that means that your profit is covering your losses. All right, even if you only win twice and then you lose, you know, 3 times. Let's say that you lose 3 times and then you win twice, you are still profitable. All right, now let's say that your risk reward is 1, 2, 3. So every time you are losing 1%. Every time you win, you're making 3%. All right, think about that. So on your losing, let's just say that you're winning, you know, 2 trades, which means you made 6%. All right, 6%. That's how much you made because you won 2 trades. Right? I want you to stay with me. So 6% because you won 2 trades. All right, and you lost 3, which means that you lost 3% because every time you lose 1%. So which means 3. So now 3% lost. All right, negative 3% lost, even in the worst case scenario, and then 3% made, which means overall you are 3% in profit. Now when you come to real numbers, if every time you are losing you lose 10,000, it means that you lost 30,000 here and then you are 30,000 in profit because it's covered by your wins. You get it? So even if you lose Monday, Tuesday, Wednesday, and Thursday, Friday, you're profitable, you will still be in positive with 30,000. You'll still be in positive of 30,000. That is the importance of trading, knowing that you're not rushing and you're not trying to make quick money in the market. And that's not what many people want to do. They have this mindset of I need to trade every day, and because of that mindset they end up losing, they end up blowing accounts, they end up making bad decisions, they overtrade, they don't have patience, and that's how they end up, you know, starting over and over and over again. So to help you with that, so let's go to the other scenario, because this was the worst case scenario. Okay, so I want us to go to the other scenario where you are making 3%. So let's say that you are making 3%. All right, or you are profitable for 3 days. So if you're profitable for 3 days and your risk reward is 1 to 3, all right, that means now you made 9% in profit, and then you lost 2 days because there are 5 days in a week, so that is 2% lost. All right, so that is now meaning that you have you have 3%, I believe. You have 6%, right? Yeah, 6%. 6% in profit. So even if you lose two days, you are still in 6% profit. Meaning that if you are risking 10,000 on a setup, you lost 20,000, but then you made 9%, and that 20,000 is covered, and you are in profit of 60,000. You see, which means you are in profit of 60,000. Those are the probabilities of how profitable you can be in the market, and like when you choose to be, all right, when you choose to do the right thing and trade the right way, then obviously you're going to see results like that. So I'm gonna go back again. The first probability was you are losing three days in a week, and you're profitable only 2 days, even if you are only profitable 2 days, you are still making money, which is 3%. And if we convert that 3%, let's just say that when you're trading, you are risking $100. All right, you're risking $100, and every time you make profit, you're making 300. I think that's fair, right? It's 300 not fair? I think 300 is fair, or should I say 1,000? That's the high leverage risking. Okay, give me a minute. Let me. Okay, so let's say that every time that you are making profit, you're making $300 because you are risking 100. All right, so you risk $100, you make 300, and you make 3% here, meaning 3% means that for every trade you win, it's 3%. So 3, that is 6. You made 600, and from your losses of losing 3 days, if you lose 3 days, you lost $300, which means you're still in profit of 300. All right, that's now when you're trading with probabilities. Let's say in the scenario where you are highly profitable, because it's not every day that you're going to be very profitable. There are days that you only be profitable 2 times a week, and then there are days where you're going to be profitable 4 times a week. And like on very good months, you will just be making money even like 3 times a week, or even 5 times a week consistently. So those are the probabilities that I want to give you, so that you can understand that when you are trading, it's all about the probabilities. It's all about the probabilities. Once you master probabilities, you've made it. Once you master probabilities, you've made it. Yeah. So now, since you see, and backtesting is one of the useful ways on how you can improve your probabilities. Like if you study the market a lot, studying the market a lot, you gain more confidence. And when you have confidence in understanding probabilities, that will help you also trade with peace, like a peace of mind. Like you won't be like, oh, I'm missing out, I need to trade now, I need to be in the market, I need to make money. You won't have that mindset. Your whole mindset will be like, okay, which days am I more profitable? Maybe Wednesdays and Thursdays, Fridays. Okay, so is this setup making sense? No. Okay, so let me just reduce my risk and end at this trade. Because now you are having a long-term mindset. You're not having a mindset of trying to be rich quickly. You know that success will come. You know success is part of you. So you don't need to like have this mentality of rushing with everything, because you know it's eventually yours. It's like you were meant for it. You were meant for it. And when your mindset is like that, when you know that success is yours, then you won't rush the process. You will actually play along with nature. You'll be playing along with nature. All right. So the reason for failure in many traders' life. Okay, we are looking now at Bitcoin. All right. And Bitcoin has this high that has been created, swing high, and it has this swing low that has been created. So now Bitcoin is in this range that we see right now, and Bitcoin has touched this demand right here, and Bitcoin has taken out this high right here. So there is liquidity below here. All right, I'm just trying to give you an example. So there's liquidity below here, and there is a demand zone over here. All right, and it's also now already at a demand zone over here. So someone will buy right here, this trade, and then they'll be targeting this area. All right, which is not wrong. But when you see Bitcoin, deciding to go down here and then eventually give you a proper setup and then buys, then you feel like, oh, I lost all of my money. It's because you did not understand probabilities. It's because you did not take time to understand probabilities. Thank you. I see people are commenting in the chat. Yeah, so now you see the fact that you are not paying attention to what the market is showing you, and you are paying attention to what you're feeling and what you want to see. So you will now already start calculating and say, oh, if I risk let's say $500, then this trade is going to make for me, because I'm risking everything, like I'm risking the whole thing, I'm risking the whole 100% risk on this trade. Once it hits that high, I'm gonna make 100,000 because it's high leverage. Now I don't have a problem with that. I do not have a problem with that. But what if price comes down here? That's now where probability comes, where okay, this one is not a A setup, this is a B setup. So on this type of setup, I can still buy Bitcoin. But if I was having 500 to risk, it's better that I risk 150. Yeah, it's better I risk 150 on this setup. Or if I have risk appetite, I can risk 200 maximum. So now I'm now trading like a professional. So even if price comes and then takes you out here because of this liquidity below here, it won't be like, oh, it's the worst day. Because you see, once you are greedy and you want to make money quickly, that's where you make reckless decisions and you miss out on opportunities. And long term, if you check your balance sheet, if you check your trading, your entries and all that stuff, you realize that you are just doing stupid stuff, unnecessary losses. Yeah, you are right. All the way from Kenya. Hey, my mind should focus more on probability than money. Yes, that's how professional traders trade. When you focus more on probability, that's how you become a profitable trader. Like you see, you don't even need to have lots of money. Even if you have $1,000 or $500, you can literally make a lot of money. It's not one trade that makes you, it's probabilities. You being able to be mathematical and to understand that even if I lose over time, I will still make money. And now, because of that knowledge that you have, you are now risking according to that knowledge. So that's why you see, one trade setup does not define me. It does not. All right, I just trade and I flow with the market and I follow what price is giving me. So on a setup like this, if you have a $500 account, all right, you have a $500 account and you want to make money out of this, you can risk a 50 first trade. Obviously, if this price goes up, this is 8% right here. All right, if you are risking 15, all right, so we can literally go on the calculator and we can just see if you are risking 50. So every time the market goes up 1 point, you're making 50. So we're going to see here. That means, hold on. All right. That means you're going to make 400. You almost doubled your account just with one setup. But you thought that, oh, with this setup, I need to risk 200 or I need to risk 100 because I'm desperate. So even if this trade you end up goes all the way up in profit and comes all the way up to here, and you see already 300 profit, because here is 400 now, you'll be closing that because you see it's coming close to the TP. So why should you hold all of your setups? So you don't need to hold all of your setups. You have a mindset of probability. Like, your mindset is not about getting rich in one day. Your mindset is about compounding. If you make 300 today, tomorrow you're going to make another 300. The next day you're going to make another 300. And the other day, when you see over the week or over 3 weeks, you have made or taken your account even to $4,000. You know, and the more you are now thinking like that, it's not about the money, and it's more about you selecting and knowing that this is a B setup. I'm going to risk only $50 and I'm going to make on this setup 400. But once it comes to 300, I'm going to close 70% of the trade in profit, and then I'm going to hold majority of it up to here. You get it? So now, worst case scenario, if this trade closes me out, I only lose $50, and I have a backup plan to risk another 50, right, over here, or even a 150, because my original risk was 200. It's just an example. But let's say you did not end at this one and you wanted to end at this, then you can risk the whole money that you wanted to risk. But if you lost here, then even for me personally, I would not even risk 200 or 150. I would just risk a 50, because it's just the same thing. It's just the same thing. I'm not focused on one setup. Imagine catching setups like this every single time is easy when your mind is at ease. But when your mind is not at ease, then you are now forcing stuff. You are no more a profitable trader. You are now a gambler. You're actually gambling the market. And many gamblers don't make it. That's why you see many people cannot trade funded accounts, because funded accounts have rules. There's a rule on a funded account that says that you can only lose 5% per day. And even if you get a very large funded account, because of impulsive behavior, because of lack of understanding of probabilities, you will want to trade and you lose 1%. Let's just say that you have a funded account, right, of 1 million. Imagine 10%. I think 1% is 10,000. Yeah. Why would you want to risk like 10,000 on a setup if you know this is a B setup? So a setup like this one right here, I would not even risk that 10,000. Even if it's 1%, I would risk 5,000 or maybe even 3,000, which is 0.03 or 0.30. Yeah, percent. I know that even if this 3,000 goes up here, 3,000 times 8, that's a lot of money. So 3,000 times 8, that's 24,000. 24,000 easily made. Then maybe like a certain percentage goes to the broker and or to the prop firm, and you can withdraw from that 24,000 up to a 20,000 or even a 22,000 goes straight to you. But someone would want to make 100K on this setup, as if the market is going somewhere. The market is going to be with you forever. The market will never die. The market is always there. It never changes. It is the same. Have you seen? The day that the market was established was years back. Yes. And it has been operating. You know, people think that the forex market will disappear. It will. No, it's there forever. It's not going anywhere. By the way, we are live on Twitch and we're also live on YouTube at the same time. So we're also live on Twitch and people are watching us on Twitch. That's amazing. The only trading institution that is live on Twitch as we speak in Africa. Yeah, in Africa. So you see, and also the other thing is that people rush to live accounts. Like, bro, if you cannot manage a demo, account, I just went to check my live on Twitch. It looks amazing. The quality is great. Okay, so like, if you cannot manage a demo account, how do you expect to make money on a live account? Okay, the purpose of the demo account, to trade a demo account, is for you to get skills. What are the skills? You to learn your timing. Yes, when you are entering the market, what time do you usually enter? What sessions works for you? Do you like trading on the during the New York session or Asia, or do you like trading London session? All right, so now those are all things that you learn whilst trading the demo. Also, risk management, what lot sizes you use. So when you are trading things like Bitcoin, right, example, like what we are looking at now, Bitcoin, then you know what lot size to use on Bitcoin. Then you know how much money you can like risk, how to place your stop loss, how to place your entry areas, how to manage your trades. So that time that you feel like you are wasting, oh, I'm not supposed to be trading demo, I'm wasting time. No, that's actually important time, because that's when you know, oh, I'm in 5,000 profit, I need to close partials. And you start noting and you write down and say, okay, this is what I do. So I have the sticky notes. Wait, okay, so I have sticky notes here. All right, I have some sticky notes here, as you can see here. So like, I write stuff on my sticky notes here, and then I paste it on my computer screen. All right, I paste it down. So the rules or things that I want to do every single day, I write it down. So since it's hanging on my screen, I know at the back of my mind, I'm supposed to close 70% profit, close partials. All right, move stop loss when price is in 2% profit to break even. So those are the small tweaks that I have, that I add into my strategy, so that it can be easier for me to manage my trade. All right, so guys, if you have questions, you can also write down your questions in the comments below. You can just write down, and yeah, basically guys, like, to be profitable, it's not really mainly about the strategy, because after you're done with the demo, all right, after you're done like learning with the demo, then you move to the live account. Now the live account is not for learning. The live account is for managing your emotions. That's why when you're starting, after you move from a demo, you don't deposit a lot of money. You deposit a 500, a 1,000. Even if you are successful, maybe a 10,000. But I would advise 500, 1,000, 100, yeah, 100, like that. What is the purpose? After you move from trading demo, the aim is now to manage your emotions. But many people will be like opening a trade and they're like, I'm only in $5 profit. That's so exhausting. But you did not see that $5. Was it because you opened a small lot size or a big lot size? And did your trade move into profit the way it's supposed to be? You see, let's say you are seeing that you are in $5 profit, and then the market moves so far and it's here and you're in $5 profit. That's good. That's good. That's good. Which means that you are a good analyst. All right. That shows you that you're actually a good analyst. It's like you can predict the market. That's a good thing. Now, since you can predict the market, then now you need to know, okay, from this $5, let me take $3 off because I'm now far into profit. This is where I am at, and I need to take out partials. Because if you are a good analyst and you can manage your trades, then you can start thinking about money management. Then you can move to money management. So the time that you start moving to money management, then you will now start seeing profit from $100. You start seeing profit of $50 in profit. All right. If you're making 50 USD on a $100 account, that's good. That's not a bad thing. That's very good. So if you see $50 profit on this area right here, then you start closing $30 and you write them off. You close them. Then you wait for 20% off the trade. Actually that $20 to go and become maybe 40 or 50, and then obviously your TP will close the trade. So people jump the process, and I always like to say you cannot get a funded account if you I'm gonna repeat again. You cannot get a funded account if you did not take time to withdraw money from a real account. You cannot get a funded account if you have never withdrawn money from a real account. Yeah, you need at least like 3 or 4 withdrawals. Yeah, you need like 3 or 4 withdrawals so that you can have confidence of knowing that you can trade. There's so much, like, guys, I'm gonna try my best to go live once in a while here on this channel, and so that I can drop information. I was just checking out how the performance will be and the quality, how good it will be. I'm actually impressed. I'm actually happy with the quality of the stream. There are no problems with the stream so far, and everything is moving well. So now skipping the process is only going to make your process longer. Okay, skipping the process of learning how to trade is only going to make it longer. So for example, number one, you need to understand market structure. Do you understand market structure? Yes. Okay. After you understand market structure, do you understand internal and external market structure? The difference between those two, because market structure the market can show on the higher time frame that it's buying. Let me show you an example. Let me just go to gold, and because gold does that a lot. Okay, so now this is the 15-minute, right? And gold looks like it's selling right here. Okay, or let me say gold is selling on the 15-minute right now, and it has been consolidating for the past week. That's why I did not even like give my signal group any signals. I did not give them quality signals. The signal that I gave last time did not even activate, so I just told them to close those setups, and we are still waiting because price has been consolidating around this area. And yeah, so now you see that gold is consolidating on the 15-minute, but once we go to the weekly time frame, then you see that gold is buying. You see, so this time frame shows gold buying, and this time frame shows that gold is selling. So now, if you look at the weekly time frame and buy, and gold sells because you are thinking that it's going to buy, and gold starts selling, then now you're going to say that the broker is trading against you. And many of the times, brokers don't trade against people that are retail traders. If you are a retail trader, the broker is not trading against you, because the broker needs to, like, you see, liquidity is only chased when it's a lot of money. Like if you're trading a retail account, that's not even 100,000 US dollars. Imagine, not even 1 million US dollars, not even 100 million US dollars. At least if you're one of those guys that have 100 million US dollars that you're trading, in fact, you'll not even need to use a broker. You will need to use a liquidity provider so that you can execute straight through the liquidity provider your trades. So you thinking that the broker is trading against you, think about it. So now this gold is being provided by TVC. So yeah, my chart. So whenever I search gold, you can basically see that. Let me just search gold. All right, you can see that capital.com, MCM, forex.com, CMC, velocity trade. So you see so many corporations that are giving gold chart information, right? So there are so many institutions that are giving that information, and you are trading with your broker. So the broker that I use is not the broker that is giving me this chart here on my analysis on TradingView. So when I'm using TradingView now and I see gold selling here, all right, or this chart information, the candlesticks that I see here, I'm not the same broker that's giving. I use a different broker. But you see, it's selling on all of the brokers. What does that mean? That the brokers are using liquidity providers. All right? Brokers are using liquidity providers. Meaning that one broker cannot make the market sell. Maybe if they call each other and then they all have a certain amount of capital and then they do inside trading, which is not allowed, and then they say, no, let's manipulate this price over here. So if you are taken out by a trade, it does not mean that the broker is trading against you. It means that your analysis was wrong. It probably means your stop loss was too tight, or probably you were liquidity. You were liquidity. If you are liquidity, price has to take you out. All right. So now there are also people that are different. There are some people that have this mindset of, if I have money, then I must trade. So when they don't have money, they don't trade the market, and when they get money, that's the time they want to go in the market. So just because you have money doesn't mean you have to trade. When you have money, it does not mean that the market is showing you a setup. So even if you have money in your live account, that does not mean that the setup is formed. So your money doesn't qualify the setup. It is the market that qualifies the setup. For me to look for buys over here on gold, I need to see confluences. All right. And if I don't see those confluences, you see, like now, there is liquidity over here, and then there's liquidity over here. So now I have two places where liquidity can take out. So now there is another confluence that I need to have for me to know that, oh, gold is going to buy. And that confluence is not met yet. So if gold falls down here, then I should not be angry and say, oh, gold is buying. Why is it not buying? And then after taking out these lows, then you can see gold going up. And then you'll be like, oh, why did gold do this? Why did gold take out these lows and then go up? Or when you see that gold has taken out this high and then gone up, then you'll be angry. It's because money does not qualify you to trade. It's the setup that qualifies you to trade. It's the setup. What are you planning? You trade and you plan. You don't open a trade and then plan. No, you plan and you trade. Some of you are trading and planning. Like, we cannot trade and plan. That is not trading. We plan and then we trade. We plan and then we trade. I want everyone to write in the comments, we plan and we trade. Please write in the comments, say we plan and we trade. I want to see that in the comments. We plan and we trade. We plan and we trade. We plan and we trade. Yeah. So while the setup did not form now, what am I doing? I'm waiting. That's it. I'm waiting. So what confluences do I use? I go on my Sophia Fx website. I go to the to the economic data. I see, okay, what economic data is there? Is there any news that's gonna come up today? And then I see, oh, is there news? If there is news, then I wait for that opportunity, you know, so that I can use that as my advantage. Hold on. So like for people that don't know our website, all right, you should go on our website. It's www.sophiafx.online. Yeah, so that's how the website looks like. Everyone can see. That's how our website looks like. Yeah, amazing, right? So then I go to menu and then click at trading tools. All right, then economic calendar. So trading tools, economic calendar. At economic calendar, that's where I'm seeing now high impact news. What high impact news is there? You can even just click that settings bar there, and then you can just select deselect low impact news and medium impact news, so that you can only get high impact news, and then you just leave it there. Then you will see now all of the high impact news for the day. Today is Thursday, so since it's Thursday, I want to see what news we have. Guys, that's how easy it is. That's how easy it is, guys. It's even better like if you select your time zone. So today there is no high impact news. There is only medium impact news. United Kingdom, Germany, United retail sales. So that is 3:30 Central African time. So that yeah, so like if you guys want to see, let me show you. There we go. I don't know if it's focusing, but anyways, the light is reflecting the ring light. So basically that's the only news that is there. So it means that it's a safe day for trading. So what do we wait for? We wait for setup. There are two ways that you can actually even execute trade. For you to be more successful, if you don't want to enter exactly before the move happens, you can also enter after the move happens, meaning that if you have areas of where you want to enter. So let's say that you want to buy gold, all right, you want to buy gold over here, but since gold did not take out this high, because remember this is the internal high, low, high, and then low, and then high. So it's like in this range, right, in this range, and you want price to be above that range so that you can have an idea of buying or seeing price going up. So now it's like too early to make the decision. What I do is, if I have fear of missing out, you see, I use my emotions to make better decisions. So what I basically do is I would buy with a low risk. So even if my stop loss hits, it won't affect me because I was only risking money to prepare for the initial risk. All right. So the official trade is this one that I'm looking for here, where I want price to come here and then buy. If that has not happened, basically it was a non-trading day for me. So me looking for price to be there and for me to buy, that is the official trade. Okay. So let's say now that for me to remain in the trade, I open here, and then my stop loss maybe below this candle's low here, and then I'm targeting here. Now this type of setup is good, but it is a low probability setup. It's not an A setup. Why? Because there's no change of character and there's liquidity below here. So price can basically just use this as an opportunity, as a demand zone. Remember, this is a demand area, to push price down and then for them to take out this liquidity below here. So for us to avoid stuff like that, that's why for me to avoid the fear of missing out, I end up with low risk. But now entering with a low risk also obviously on your balance sheet won't look nice. If you are using back testing software, or maybe you have connected your account with a trading plan or whatever, now that will show that you are losing a lot, because you are testing the waters before you enter, and that's now what you have to deal with. There are other instances where other people put entries like this. All right, they put entries like this, they put stop loss same place, and then you see now, then that makes now the risk reward a bit bad. Then this is now 2% being made. This one's risk reward is at least 4%, and this one's risk reward is also 4. So this one's risk reward is better, but it's not an A setup. This one is a B setup. All right, it's a B setup here. High chance of losing. This one makes more sense of losing, and this one is also a B setup. So there are 2 B setups and then 1 A setup right here. The A setup is now going to take you a lot of patience, and the A setup is also meaning that you might not trade today because price might not buy. Like for example, owning a Ferrari. If you own a Ferrari, maintenance is expensive. Tires are going to be very expensive. Owning a Rolls Royce, very expensive. Tires are expensive. Owning a Toyota, no homo. Owning a Toyota, you just know that it's a very cheap car, nothing to maintain. So even if you drive it any way you want, you won't care about it because it's a Toyota. It's the same as A setups and B setups. All right. So guys, I hope you get it. Like this is very informative stuff. Like once you master this stuff, you'll be a very good trader. Because at the end of the day, it's all about mastering your emotions. It's all about mastering, because you see, someone will be looking for let me just remove this trash here. And I don't like it if my chart is dirty, to be honest. I'm not going to lie. Someone is going to use this as a demand zone to buy from, and then they are going to say that price is going to buy from here, but it's not going to buy according to me. I would not. So when I say it's not going to buy and then price really does that and buys, then they'll be like, oh, he was wrong, I was right. Nope. You cannot be consistent with stuff like this, because once you start getting used to doing this type of sloppy work, in the long run your probabilities are not going to be nice, and it's going to affect your mindset, you know. So why am I saying so? Because the highs were not taken out. So we need price at least to take out the highs. for us to have that understanding of buying. Or we need to at least like test the waters, enter with low risk, waiting for the highs to be taken out, and that retracement, and then we go forward. So entering with low risk, having a good stop loss, low risk, good stop loss, TB right here, and then the official trade, basically we know it is the trade that makes more sense. It would be when this high is taken out right here, to look for retracement and to buy. That's the trade that I'm betting for. That's the trade that I'm looking for. And that's gonna take time. Now listen, when you're day trading, this is the sad part about it. You have to understand your time frames. All right, you have to understand your time frames. If you don't understand your time frames, then you won't know when you are going to trade and when you are not trading. I understand my time frames. Okay, I understand my time frames. So even if, let's say that I'm trading on the 15-minute, okay, if I'm day trading, or on the 30-minute, if I'm making my entries on the 30-minute, okay, like this is a 30-minute, this is clear liquidity. But anyways, let's say that I'm trading on the 30 minutes, okay, and then I enter. You need to understand that you need to give the market 30 minutes to show you if it's going to be in profit or not. Yeah. So you can literally enter this trade here, and then you see it was in a loss, and then someone gives up, and then when you close the trade, the market goes up and then closes positively, and then the next candle opens and goes up. So that's why I'm saying that if you're trading on the 15-minute, you should wait 15 minutes to see what the market is doing in 15 minutes. At least 15 to 30 minutes. If you're trading on the 30 minutes, you should wait for 30 to 60 minutes to see what the market. If you're trading on the 1 hour, you need to wait for 1 hour or 2 hours. If you're trading on the 4 hour, you need to wait for 4 hours or 8 hours. So that is the rule, the basic rule. I'm just giving you too much, guys, too much. Waiting for that time is going to enable you. It's going to enable you to be a better trader that is making less emotional decisions and more systematic decisions. And those systematic decisions over the long run is going to make you more money. With that being said, is anyone having questions? You can ask anything before I end the live. Let me go to the chat. Let me look at the chat. Someone said share the link. What link do you want me to share? The link is already shared on the Telegram. And you can also just like get the link from any questions? Can someone give me questions? All right. Questions. Okay, I want questions, not request. There's a difference between request and questions. Yeah. Like focusing on probabilities helps traders with getting their edge. Yes, you'll be actually a more powerful trader. You will not think about money, trust me. Yeah, like you will even forget about money because you'll be making so much money, because your mindset is no more about one day. Your mindset is about setups and risk. Now you are no more trading like a trader. You are not trading like a system. You are like trading like an organization. You are a professional trader, you know, because like when you are running businesses at a large scale, you you think more about the balance sheet. Yeah, you care about numbers. And when you play the numbers game, it's no more about emotions. So even if you lose, you don't be like, oh, I lost 1,000, I lost 3,000, I lost. No, it will be more about percentages. You'll be saying I lost 3%, I lost 1%, I lost 10%, and for someone that 10% will be a lot of money, but how much are you making and what are your probabilities? That's actually what's important. A lot of people will be telling people, oh, only risk 1%. But for me personally, I believe it's about probabilities. If you know the capabilities of your strategy, you see, like one strength that I have as a trader is I know when I will never trade. Like I know when not to trade. Like I can stay 2 weeks without trading. But like newbies, people that come in the industry, like they have this mindset of, oh, I need to trade every day. And that's where, like, you guys, you should find hobbies outside of trading. You should, you see, when you have a life that is scheduled, like, you know, you're only looking at the market from this time to this time, then you know, okay, London session is opening this time, I'm going and doing A, B, and C, and then you come back during the New York session, then you come and check, oh, did the market develop? Oh, did not develop? Okay, you put an alert. So on your device, you'll be getting an alert if the areas you've marked have hit. If the market did not hit those areas, you don't come back, you continue with your day. And at the end of the day, you do your market review where you'll be looking at the chart, and that's why it's always important to take screenshots of your analysis. You analyze in the morning, you continue with the day, you come back at New York session, you analyze, you take a screenshot, and then at night you do your review. That's how you realize, how did I miss this? Oh, thank God that I did not. So that's how you now start becoming a better trader. Not by you in your mind thinking that I need to barcode, I need to open many trades. No one becomes successful with that. No one focusing on probabilities. So yeah, there were things you said we should master. Well, what things? Remind me. What things did I say? There were things. Yeah, remind me. Trading is more fun. Like if you have a lifestyle with it. If there's a lifestyle, like you see, after this life, I'm going to cut my hair, and also this week I need to be somewhere. I need to travel somewhere. I'm now contemplating. I'm thinking, should I travel or should I book myself somewhere and then like just chill? Because like I want to rest. I want to rest mentally. So I'm now contemplating, should I go to that place where I'm supposed to go, or should I like take myself out and then rest, or should I just like maybe get a haircut or like do something nice so I can feel like. So there should be a lifestyle, all right? Like 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 just look at the XY. Like there is nothing happening here. Like what to, like, you see, this was the setup, all right? This was the setup. Buys here. It already played out. What more can we do? Now we cannot do anything. We have to wait for price to either take out these highs or to consolidate, because there is no setup. You see, that is one thing that traders don't understand. When there is no setup, there is no setup. Like if there is no setup, there is no setup. So now someone will pass by this great and amazing A setup type, all right, which was beautiful, all right, rally base rally, and then price came back, beautiful, buy. Someone would now want to force a trade inside here just because they need $1,000. They feel like, oh, I need $1,000, so I need to quickly trade. And that's how we lose. right? That's how many people lose. You trade the plan and you plan the trade. Like you need to have a plan. You trade the plan and you plan the trade, right? So there are certain things I'll explain more on the bootcamp. So I'm going to have a bootcamp whereby I've already prepared the presentations and everything. So we'll be having sessions where you'll be seeing a slideshow of me explaining basics from like if you feel like there's something you are missing, this will be the best this will be the best um boot camp that you will get, okay, because it will help you like get some of those missing parts, those missing parts. And it's always important, share with your friends, share the link with your friends, put it on your statuses, on your social media. And guys, I have been testing a broker, right? And this broker that I've been testing, they're not verifying my account for 3 years. Would you believe it? I've been trying to verify my account for 3 years. You think that that's a broker? Is that a good broker? That's a terrible broker. I will not mention their name yet. I will try to email them again and ask them. And for 3 years, I left my money inside there. Like, I did not even go and look for my money. I left money inside the broker. And now I'm tired. Like, I want my money. Yeah. So the bootcamp like is going to be very helpful, and the good part is that like everything will be here on YouTube. So people, you can like watch it over and over, and like it'll be insightful for everyone. I believe the bootcamp is next week. Yeah, the bootcamp is next week. Let me see if I can get the poster of like, do I have the poster here with me? Do I have the bootcamp poster? I don't think I have it. Oh yeah, I have it here. Here it is. Here it is. For the last part of the video, I'm going to tell you guys what I think about certain markets and stuff. But is it like people would also be wondering, why are you not releasing market analysis videos every week? And then I would want to ask, will you drink water even if you're not thirsty? You won't, right? So like, why should I release videos while the market did not do what I have said yet? So when I don't release it, it means that I'm still waiting for certain things to happen in the market. Like, I care more about my reputation, all right? I care more about what I'm saying, all right? I'm paying attention to the words I speak online. So I just don't want to drop videos for the sake of dropping, and then at the end of the day, they are not having value. So that's the bootcamp, all right, that we are having. It'll be next weekend, Friday, Saturday, and Sunday. So 3 consecutive days. You can literally like even go on our Instagram and then just share that post on your story. That'll be very helpful. And yeah, that'll be great. So like, if there is nothing in the market, that's chicken. Chicken run broke. I'm hyped as ever for the yeah, we're hyped. Powerful. I hope you see the broker is a friend of mine's broker, so like I don't want to talk a lot of stuff. But I hope that they're not there to scam me. Like they should not scare me. Like I put enough money inside this. So like they should not run away with my money, please. I also want to be like the other mentors. I want to drive polos. If they take my money away, how will I drive a polo? Oh gosh. So so guys, like the DXY, you see, I've been analyzing DXY, right, for the since the beginning of time. DXY, Trump's presidency is chaotic. And you see, DXY stands for US economy, right? So now Trump is a type of president that I need to understand more. There are times that I like him a lot, and then there are times I don't like him. But I like him 70% of the time. In my lifetime, yeah. Yeah, he is actually so polo driving forex traders. Yeah. Yeah, they drive polos from Japan. So let me not judge them anyways. So now they will check this video and then everyone will be fine. Me, I don't want beef. I don't want beef with Nambian traders. Nambian traders, they just invite people to brokers. They don't even, like, many of them, they don't know how to trade. So like people that are drawing trend lines, I don't believe in them. Anyone that draws a trend line, I don't believe, because you see, a trend line can even draw this now. You see, a trend line can draw this, and then now where's the 90% rule now? So and yeah, like that's what the trend line traders are now looking at, and then this is a flag here, and everyone is like obviously going on YouTube here and now looking for their favorite traders so they can like watch their videos and then analyze the market and learn from them apparently. And then so like I don't have a problem with that, guys. Do what supports you, and this can also be a good way of trading also, by the way, if you're drawing that those lines. But it's not consistent. Okay, it's not consistent. It's so yeah. So like guys, I was here, like these are things I used to do. That's what I'm saying. Does it work? Yeah, most of the time. So if it's working for you, use it, but it's trash for me. Okay, it's trash. So yeah, it is. That is what I think. I will drive Isuzu. Yeah, they are driving Japan. It's not easy. But anyways, who will notice if it's a Japan? They'll just think it's a car. And it's a car. So only when the car is broken, then yeah, the parts cannot be found. So now, with that being said, guys, we're looking at DXY, right? And DXY, as you can see now, this is the weekly time frame. Beautiful. That's clear. Is that not clear? Last week it was buy, the previous week it was a buy. So we are buying. What else can I say? What else? Like, what else can I say? What more can I say? So we see price showing us break of structure right here, and price is buying. All right. So on the weekly time frame is showing us clear buys, and also we do not see these highs taken out on the daily time frame. All right, beautiful. So those are now the areas where on the daily we can see price, you know, going up to, and basically now we see a break of structure right here, and yeah, break of structure. By the way, like I think I'll also go live on my other channel, my private channel, but there is not trading stuff. It's different scenario. What line are they using? So they confused. Yeah. People are distracting me. So yeah, those guys are powerful. All right, but but guys, like, they're showing money on social media, so we should respect them. Like, they're showing money, like they show stacks of money on social media, so they are more rich than me, so we should respect them. Yeah, we should respect them because, like, they are more successful. Yeah, those guys are rich, guys. Those social media traders, whoa, extremely rich. They are very rich. So yeah, so now what I see is, I see this internal price changing, and then this demand has been respected right here, and price came back and then ended at this demand again. So now we see clearly that we are making this area internal. We might even see price coming lower, but this can be the deal breaker right here. Yeah, so what I basically think with DXY, there's this gap that has been made, and price can come and cover this gap, probably even take out this lows right here and go up. So worst case scenario, selling and then buying, or selling, taking out this liquidity, coming to this demand zone and then buying, because there's a huge demand zone right here. Yeah, so like anything beyond this is not an area where I would recommend anyone buying. Yeah, so like once price is below here, maybe like with a week, yeah, like if there's a week below here, then I can say, oh, okay, it's just a weak price, maybe just was like grabbing liquidity to go. So yeah, it makes more sense to follow basic market logic to see price on DXY going higher and taking out this out. When those highs are taken out, then next week, then I can say what I want to say. Not yet. It's too soon. It's too soon for me to make assumptions on that. And if this is going to sell and do all that stuff and buy, if it's selling and buying, then we know also that Euro USD might buy up to this demand and then certainly. So there is a nice inefficiency right here, and this liquidity was basically taken out. I was looking for buys on Euro USD, but Euro USD was not, it did not change character. So yeah, so you see that's how boring it is to trade. We have to like wait. So yeah, this makes more sense to see Euro USD buying all the way up to here and then selling. This liquidity being taken out and then selling. A type of trade where we see price coming here and then that type of a trade and then seeing price. So like 1 to 3 risk reward would make a little bit of sense. Not anything beyond that, because that's not stretching it, because whatever it starts, going the opposite direction stuff. So yeah, this is a B setup right here. Yeah, I would mark this as a B setup, and the A setup will be price coming there and obviously going up, taking out liquidity, internal change of character, retracement, and then selling. So that would be the A setup that I would be risking more on. This one would be a low risk trade to avoid prices going up. That's the simple doctrine of how I am looking at the markets and how I look at all that. I would drive Isuzu. What lines are this? Yeah, too much noise. Where's the noise? Is there noise here? So yeah, so guys, yeah, that makes more sense for us to look at Euro USD in that way. Yeah, so I would be basically like on this base B setup, even if you have a 500, risking 200 on this, you can recover the 200 basically. Yeah, so because you see it did not take out the low, but usually when price is close to the target area, it does not retrace that deep sometimes. Okay, so let's just hope for the best and see, because you see that this thing has happened many times. You see it coming, retracing here. Okay, let me just draw this supply. came to the supply, took out liquidity. Same story over here. All right, let me find the, all right, yeah, so supply, same story. All right, and now supply. So I'm just following that pattern. Yeah, and obviously inefficiency here, so, and there's also inefficiency here, and there's inefficiency. So price is just doing the same thing over and over. So I don't want to be creative, I just want to follow what makes sense. Yeah, and to see this low being taken out, all right, on Euro USD. So if you're watching on Twitch, please subscribe, follow, whatever. I don't know how Twitch works, so I need to maybe change my Twitch name. I need to change the name because now it's having my name, so I need to change it to Sophia Fx so that I can have my personal Twitch also. Yeah, because like this, there's something that I want to do. Yeah, I want to do something. There's something I want to do. I want to do something on Twitch, and Twitch, and where is the noise? Someone just wrote too much noise. Where is the noise? Oh, like, are you talking about the no, like noisy cars are nice. Noisy cars are nice. Like if a car is noisy, oh my god, I love it. I love it when cars are extremely noisy. Like my dream is to have a lot of noisy cars until I'm 40. Then I will adjust and just leave them and look at them, and then drive cars that are maybe electronic. No, when I'm 50, yeah, then I'll drive electronic cars. But for now, I need like noisy stuff. Like I need something that can like make a lot of noise, irritate my neighbors. When I'm in the street, people must know I'm there. When I'm at the corner, they must know I'm here. You know, I'm young. Like, why should I want a silent car? Who cares about that? Even if my ears are bleeding, I want them to bleed. Nambian traders, guys, Nambian traders. One day we'll on my other channel we will do research on the Namibian traders. Yeah, we will try to see how they are doing. We will try to see. Yeah, I want to see how the Namibian traders are doing, because like the South African traders obviously are not normal people. South African traders are crazy people. That's why you see millionaires are being made through forex in South Africa as we speak, because they are crazy. Those people are traded like they my influence in trading crazily is from South Africa, to be honest. Like, you see, I have friends that are crazy in trading. Like those guys trade like it's like they don't have a chest. They trade like they don't, like they are not human beings, like they're not alive. And I would be like, whoa. And then he'll be like, I blow. We'll try tomorrow. I say, hey, how much did you blow? He'll be like, just 100K. What? You just blow? No, you cannot just blow 100,000. No, you have to preserve 100. No. Like I'm like, yo, guys. Like I would do that on my scalping account, but not my main account. Like for me, even if I lose like 5,000, it's okay. But like on my main account, hey guys, I cannot lose a lot of money on my main account, because my main account is having a lot of dreams accompanied to it. So it's like if I blow my main account, it's like I'm dead. It's like I'm going to be depressed for a while. Like I did not see they withdraw like my mentor thing. It's only in Sophia Fx we are shown how we withdraw. Yeah. Like even on this YouTube channel, like we show how we are withdrawing the money. Like we do it live, and like you see, like I don't understand what's going on in South Africa. Like I would take a $40 to 1,000 and I would show how I'm withdrawing that $1,000 um countless times. But I don't understand how those guys are so aggressive and they're not. But that is like basically my scalping account. So on my scalping account, I would like make money and withdraw, and I will share that I'm withdrawing the money. But other guys are like, oh, because of tax purposes, we are not. No, like it's not a large account. You can just show how we are trading. That's it. Like you don't need, just show the small amount at least, so that people can believe that you're a trader. All right. So like imagine if I was only living off mentorship, then I would be like here on social media, like telling people, oh, buy my course, guys, buy my course. And then I would be making my course very cheap because I want people to join my course because they are the ones feeding me. And many of them that I also know, they would be like going on social media and then renting people's houses. Like there's nothing wrong with renting. Like I support renting houses. It's not, it's even cheaper. It's better to also have properties and then rent them out, and then you rent in your own property. But like you cannot fake a lifestyle. Like don't show that you're living a rich life while you are maintaining that life by telling people to join your mentorship and you cannot trade. So you should make money. Your main, as a trader, your main income source should be trading. And certain things take time. Your profitability will take time. And if you don't want to make 200 as profit, someone is also gonna scam you. Someone is going to scam you. They will tell you that they are going to make for you that money, and then you are going to cry. So sometimes it's just better to make 200, 200, 200, 200, 200, and know that you have made $1,000 for 2 weeks, and know that, oh, like if you have made 1,000, then you know that, oh, at least for my $1,000 I can go and buy for myself a shirt, you know. And you bought yourself your shirt, and you know that it's from your trading that you bought, not someone buying you, not someone doing what, but you bought your own shirt with your money from your trading. That's gonna give you confidence that one day you'll be at the stage where you're withdrawing 10,000. The fact that you bought that shirt for 200 is enough. And that's what I'm telling people. All of these guys that are lying to you guys, you know, like I would make a lot of profit, but I'm not showing that on social media. Why? Like, I don't think it's necessary now, maybe in the future. But I want to build my students. I want my students to become mature. I want to relate with my students. I want to trade the accounts that my students would trade. That's why I trade my scalping accounts, so that my students can see, oh, so these are the type of accounts that he's trading. So he can, like, he can take a 400 to this amount. And you would see that I'm not trading every day. I only trade specific days. And those are the days that I make a lot of money on the scalping account. You would see me taking $50, making, you know, 1,000 out of 50 or 500 or whatever. Like, you can just do research on me, and then you see that I'm making those results. And when I make those results, I show you how I'm withdrawing, because I don't want people to be stuck on that mindset of, oh, I can become a millionaire in one day. No, you can't become a millionaire maybe in 2 years. But you have to be grateful with the small you make. You have to, you see, like you see, like this Euro USD trade. You cannot say that this Euro USD trade is a trade that's going to make you. No, you have to mix it with probabilities to know that, okay, this trade I'm going to risk 200, and I'm expecting to make 800 from this setup. When you lose 200. When you win, you make 800. Can you be able to lose 200? Will you be fine with yourself? Will you be happy? No. Okay, then risk 100. You see now? So you reduce your risk so that you can have more probability. And by the end of 3 or 4 setups, you've made 800. You can withdraw that 800, and you can basically make money. Sophia Fx is the first I've seen that really demands results from students. Yeah, because imagine, like, if I'm running a business, I would want people to see results from my students. Like I can fake it, because you, like, imagine if a student, like you as a student, if you're paying me, and and for like my mentorship is expensive, for some people. Now imagine if that person pays me that money, then like I can flex, because like I'm getting that money, so I'll flex with that money, and then the students are failing, and then the mentor is making money. So like the mentor is making money and the students are failing because the person doesn't make money from trading. But I don't want to see you every day. I want to make sure that, like, you are learning from me, you have the skills. I can one day brag about you, because I want my company to grow. I want to help more people. Yeah, so because the reason why I'm talking about psychology a lot is that many traders, people think that certain results are impossible because they don't see it happening firsthand. Yeah, they think that is impossible. And you see, like, people think that those things are impossible. Like, you see, making 100,000 is not difficult if you have 10,000. If you have 10,000 and you have an A setup, you can literally risk the whole 10,000 on A setup and you can make 100,000. Making 40,000 is not difficult. You can risk a whole 3,000 or a 4,000. You risk it, the whole thing. On a setup like this, all right? On a setup like this, over here, you can make a 40K just by price falling up here. Even just from here, 40K. Even from here, 40K. So, like, it's easy to make that money. If you open a big lot size and you're waiting, you can make the money. But how many probabilities do you have? That's why you see, now, your enemy is no more the amount you cannot make. Your enemy is now the resources you have. You see? Now your enemy is now time and resources. So because of time, like, if you are making $200, trust me, you are a person that can make 10,000. It's just that you need time. Now, some people want to jump the process and they want to make 10,000. And now, because of them wanting to make 10,000, they risk a lot of money and their psychology is affected, and then they lose their trading strategy. Because now you go to social media and you want to go and look for another strategy, and you want to, like, upgrade more and change more and do this, and you forgot that you were able to make 200. Your limit is not that. Imagine if you had 60,000. If you had 60,000, all right, in your bank, risking a 3,000 to make a 40,000 is nothing. Now you know that, oh, I have 60,000, so I have more probabilities. I can trade more, and I can risk 5,000 every single trade, and I know that this 5,000 is going to make me 40,000. So losing that money is not going to affect you. It's the same as $100. If you have 1,000 and you are risking on a trade $100, do you think you are going to care when you lose 100? You wait for the next day and then you'll be making money. So don't think of yourself as a trader that is making less. Think of yourself as a trader that is underrated, meaning that people don't know your value. That's why they're not investing in you, but you believe in yourself, and that's why you are taking time to trade with those small amounts until you can qualify. So when you're starting, you're actually focusing on building your bank account. Your aim is to build your bank account so that your bank account can be strong enough, like, at least until you make it, you can make your first 100K. And that's the building phase. Building phase can take 1 year. Building phase can take 6 months, because you are building. When you're building, you are reducing your expensive lifestyle. So you don't go out to restaurants, you don't spoil people, you don't buy impulsively, you don't subscribe to unnecessary things like Spotify, like, you know, I'm using Spotify, Netflix. I don't even watch Netflix, but I'm subscribed. Even if it's small amounts, like Spotify is not expensive, Netflix is not expensive. So many services that I use are not expensive, but when you add them together, you will start realizing that together it's a lot of money. So you reduce your losses and you're building your savings account. You are saving until you reach that point of realizing that after 6 months or after like obviously in 6 months you can, if you are trading like this with probabilities, in 6 months you can have 100k. That can be your first time to say. And you see, and when I'm saying this, I'm not saying that you will not lose. I'm saying while you're losing, you can build up yourself to have 100k in your bank. Like I was one of Nambian Trader Signal Group years ago. One moment they gave signal and said buy, then again sell, and that was the brutal. Oh, that was the burial of my account. I'm a living testimony of Sophia Fx. They teach you to catch your own fish. Yeah. Thank you very much. Thank you very much, Dr. Peter. Yeah, so you see now, while you are actually building that account to 100k, what happens? Your bank account, not your trading account. First month like this January, maybe you make 4,000 or 3,000 or 1,000. Yeah, you withdraw it, you leave it. The next month you make a 6,000. Okay, end of the month when you see how much you've withdrawn, 6,000, you continue. The other month you make a 10,000. All right, and then the other month you and you see, trading, even if you have now over 3 months you have 30,000, it doesn't mean you deposit 30,000. No, you only deposit 2,000 or maybe a 3,000. That's your risk for the month. If you have blown that 3,000, now you are now 1 month behind. You don't go and take the whole 30,000 then redeposit again and then blow again. No. Do you know that, like, why a doctor or a nurse or a person that's walking, do you know why those people drive cars, they have their own houses? It's because they know that there's money coming in every month. So like they go and take unnecessary debt because they know that there's money coming in every month. They know that they are going to be paid, obviously. Sorry, it's dark. Okay, so like those people know that they're going to be paid, obviously. They know that it's that like the salary is coming always. So also as a trader, you should put yourself in a place like that where you are saving. Every time you make money, you have a salary. You should have a salary. And you see, like I'm talking about these things on live on YouTube. I'm not talking about it in private mentorship. I'm telling the public, like I'm talking on a public platform, what other mentors tell people to pay for. You should build yourself. If you make 10,000, your salary is 2,000. You cannot pay yourself a salary. Like just because you made 10,000 doesn't mean that you should go in the shop and buy clothes worth 10,000. No. You see? Obviously, you should buy yourself. Like you see, when I made a certain amount of profit, I bought for myself this thing, so that I can like use it for my work and stuff. So like when I'm not on my computer, my alerts and stuff, because I don't want a phone. I don't want to use a phone for now. I have my targets and my goals. So I rewarded myself. All right. So that's a reward I gave myself. All right. Like the more I'm making that the targets that I want to make, then I'm rewarding myself to buy small stuff, to just remind myself that you're working hard and I'm grateful for you, Brendan. You're doing a great job. All right, because obviously no one's gonna clap hands for you. People don't clap it. Like people only come around you when they want something from you. They want to show how big they are, how great they are, or what they know, or what they will get from you. That's just why people are around you. So you need to also like just take yourself out. Do something. Yeah. Long run, you're the best trader. You'll be coming to me and you'll be thanking me. You'll be telling me, oh, today I made 3%. The other day I made 4%. The other day I made. Is it like we have been sitting waiting for this market to move and it's so slow? Will that make me now to open trades? Nope. If it sells without going to that area, will I stress? Nope. That's just how trading is. After 2 years, you'll be thanking me and you'll be saying, I made my first $100, $100,000, over some time. And then you'll be coming and then you'll be saying, no, I'm now having 500,000. So now the more your bank balance is growing, the more you are risking per month, which means the more you are depositing in your broker. So now there are now three things. your brokerage account, all right, your brokerage account, your bank check account, and then your savings account. So now you have 3 accounts, all right? Your brokerage account needs to give you every month money, okay, depending on the purpose of the account. Like if you have a scalping account, obviously it must give you every week money. That money that comes goes into your savings account, not your check account. It goes to your savings account. All right, the money goes to your savings account. Once the money enters, so let's say that you have made 10,000, you move that 10,000 to your savings account. The savings account then now pays you a salary. So from that 10,000, obviously, if you're a Christian, you need to give tithe. You give you a tithe of 1,000. That is 10%. Then you know that, okay, so for this month, for the next month, I'm going to redeposit. Even if you have money in the broker, you should know how much you are redepositing. Then you take 2,000, you deposit, and then 2,000 is your salary. From your salary, that's where you are supposed to pay your rent. Like, you cannot make 10,000 and now you want to go and live in a $5,000 house. You cannot rent a $5,000 house. You should rent a house that's costing 700. And if you cannot afford to rent, stay with your parents. Because you're not, like, it doesn't mean because you have 10,000 that you are rich. No, that's a poor person's mentality. That's why poor people, they don't have safety net. They have nothing. They don't plan. Poverty is a mindset. Poverty is not absence of money. Poverty is an absence of a mindset. That is what poverty is. The real poverty is absence of a mindset. That's why the poor will remain poor and the rich will become rich. Why? Because poor people don't plan. Poor people are not disciplined. A poor person is not a person that does not have money. When a poor person wins a lottery, they end up being broke because he's poor. All right. So then probably you'll be left in your savings with 5,000 or something like that. You leave the 5,000. Now you have added to your 2,000, you know, a 2,000 in your trading account. Maybe you already have money in your trading account. Now you added, you divided some in your scalping account and then some into your monthly withdrawal account or something like that. If you have other accounts also, you divide it like that. Then you continue trading. All right. From your scalping account, you know, every time you're withdrawing, you withdraw your money from your scalping, you move it into your savings, you pay yourself salary, you give God what belongs to him, and then you basically redeposit in your trading. So now you know every time you're getting salary, both from your scalping account and also from your, so the salary you get from your scalping account, even if it's a 200, go and get ice cream or go to a nice place and eat nice food. That's scalping money. Or if you're not staying on your own, like buy electricity or something, like do something with the money, because you're withdrawing every single month, every single week. That's how you build up discipline. Without realizing, you'll have 100K in your account, and then you will now change the amount you're getting as a salary because of how profitable you are. And that was while you were losing. You can even just win twice a week with that probability, right? With that probability, you're still making a lot of it. So I've been live for 1 hour. Yeah, they teach you how to catch fish. Yeah, I've been live for 1 hour, guys. Make sure that you check out our site, www.Sophia Fx .online, and also we're having this event, 3 days event. All right, we're having this event that's coming up. It will be live on this YouTube channel and also on Twitch. So you guys can basically join us there, and hope this video was insightful for everyone. Next time I think there will be a intro. We'll like try to create an intro and all that stuff, so that like when we are going live, there will be like an intro and also an outro and yeah, stuff like that. so that it can be better. I want to try my best to go live every single day. I think I'll be doing it after the yeah, it's true. Like there's so much value on this channel. Like you can literally like sit down and then listen like to a lot of stuff. There's also like another channel that I'm studying where I want to focus more on psychology. I want to start a raw channel because this one is more of trading and all of that stuff. But there's another channel I want to start just for psychology, like where I'll be doing psychology stuff. And there's another channel also that I've started called Inside Brendan's Mind. You guys will be seeing a lot of stuff on that channel, not only reacting videos. I want to travel around the country and show around certain places and museums and stuff. So like I also want to like document that stuff and then drop it there. So that so like I'm planning stuff with YouTube, and I hope the information will be valuable. But like I want to create a actually after this I think I will share that channel of the psychology, because psychology is very important like for someone to succeed, because I personally feel like there are people that go through so many things and that's affecting their trading lifestyle. And no matter how much money you have, if you're not taking care of your mind, your soul, and your body, then you're not going to be profitable. So I want to open that channel whereby I want to drop a lot of content there. So bear with me. I'm planning for 2026. I'm planning a lot of things. So like this channel will not only be in one location, it'll be in multiple locations. And also the other channel. So I think I'll call it Sophia Fx podcast or whatever. Or like what should I call it? What should I call it? Because podcast is like I already have a podcast channel. What should I call it? Must I call it trading psychology? Must I call it trading psychology? Like what should I call it? I don't want to put my name. So that you guys can just like give suggestions of names, and then like I can just name it after whatever you want. Because like I want to make sure that there's a channel, this one is for trading and all that stuff, analyzing, and then there's another channel that's dealing with like you as a trader, like your mindset and all that stuff. DJ Capital Psychology. Yeah, that's also a good one. Yeah, that's a good one. DJ Capital Psychology. Yeah. DJ Capital Psychology. I should probably like add both names, DJ Capital and Sophia Fx Psychology. So that channel, guys, that channel will not be consisting of charts. It will just be about like camera, me talking, and maybe even me going through some trades that I took, terrible trades and stuff, good trades, bad trades, and then me like going through and then talking to you about it. DJ Capital Trading Psychology. Yeah, that sounds good. Like this year, guys, like this is 2026, like we have to push. Like there's no compromise this year. This year we are pushing. Like this is 20, guys. I need to go and cut my hair. I'm going to cut my hair, and then like what I mean by cutting my hair, I'm not cutting the whole thing off. I'm cutting on the sides. My barber is even tired of me because every time I come, I'm not cutting the hair off. Yes, please, that would be awesome. Yeah, I want to do that. trust me guys, I'm having a lot of stuff in plan. Like also on the other traveling channel, I'm having like lots of stuff that I'm planning. It's crazy. um yeah, like I don't want to say a lot. All I'm saying is that you guys are going to enjoy it. You're going to enjoy every bit and piece of it. Like Sophia Fx is, we are going to take it far, like, and we are going to redefine how trading is viewed as, because like people like to lie about trading, and our aim is to like change that whole perception and stuff. Yeah. And at a stage, I don't know, let me not talk a lot, but anyways, with that being said guys, boys and girls, I'll try again to go live tomorrow. I will see, like, either I do London session live sessions, or I do New York session. If I go live with the students on London, then I'll go live here on New York. If I go live on New York, then I will have to schedule London, and then I will like just create a schedule and plan everything so that I can know what time I'll be live and what I'll be doing, and so that we can make it worth a while. Because like there are some people that cannot pay for mentorship that really are learning from this stuff, and it's very useful. So thank you guys, thank you everyone for being here, thank you for liking and subscribing, and with that being said,